All information contained in this podcast is general in nature and does not consider your individual circumstances. You should consider the appropriateness of this information with regards to your individual objectives, financial situation, and needs. Welcome to Sharing More Than the Sheets, a podcast to help you and your partner make better financial and lifestyle decisions so that you can both focus on the things that you love. I'm your host, Michael Curry, financial planner, green thumb, husband, and just dad. Today I was planning on talking about a completely different topic, but since this morning I've had six conversations along the lines of what I'm about to discuss with six different people. Three of them are other professionals. One was accountant, two others were mortgage brokers, and the other three are clients. And I've had this chat and I thought, you know what, let's this is the beautiful thing about having your own podcast. You can talk about whatever you want. So if they're talking about it, if I'm talking about it, I feel like it's something that you need to hear, really. So this topic is quite relevant at the moment, but really any time of the year or any part of your life that you're listening to this topic, it's going to be relevant in some capacity. But markets go through ups and downs, as you'd probably know. And there's a big mistake that a lot of investors make, which I've talked about many times before, and that is trying to time the market. Now, timing the market, as I've said previously, you'll probably get it right maybe a quarter of the time, maybe 20% of the time. But 80% of the time, you most likely won't get it right and you might make a mistake. And what timing the market is waiting for the right time to sell or the right time to buy. Now, of course, those times do arise. And if you were looking or to buy or sell something, and you might find, hey, now's a great time to be selling or buying. And it needs to be taken into account in your decision making when you're buying and selling something, whether it's property or shares or anything, even a car. But at the same time, there's a trap that you need to make sure you don't accidentally fall into, and that is trying to wait for the market to drop or to get worse. Hypothetically, let's say the market's down at the moment, whether we're talking property or shares, and you're someone looking at buying. And the mistake that I'm seeing is people saying, oh, I want to buy, but I'm just waiting for it to get worse. And then I'll buy at the right time. And there's some serious risks in this strategy. Now, the obvious one is that you'll miss the recovery. You'll miss when markets start to go up. You may miss it because you're asleep and it happens overnight. You might miss because you have a busy week at work. You might miss because we might see it, but you might miss it because you're too slow to react and too slow to jump onto it. You might miss it because you don't even realize it recovers. And this is a significant risk when it comes to anything. We call it time out of the market, but it could be just you literally having money to invest and you're just waiting for the right time to invest. Thinking, oh, it's going to get worse. It's going to get worse. If you're looking at holding something long-term, now again, whether it's property or shares, and when I say shares, of course, I'm even referring to investments in your super, not just personally held shares. It's if it's something that you're looking at holding long-term, usually it's not too much of an issue whether you're even buying a little bit high and if it does get worse, because if the market recovers and continues to grow, then as long as you're in a higher position from where you started, you're okay, you're winning. The other thing as well is the opportunity cost. Now, I've seen so many people over the years have money sitting in the bank, whether it's for a property or shares or for their super, and they're just waiting for the right time. And the issue is the right time may not come straight away. It might come in 6 months or a year or 2 years. Let's say you buy at the right time. Let's say you literally buy at the absolute perfect time possible, whether it's, again, property or shares, but you've been sitting in cash or you've had this bunch of cash just sitting there for a year or for 2 years or for 3 years. You need to ask yourself, what's the opportunity cost? What could that money have been doing in that time? Yes, if you bought previously, 2 or 3 years ago, you would have bought at a higher time, but you've got the risk of what if it doesn't get worse? What if it just continues to grow and it continues to get better? You're suddenly buying at a higher point as well. And really, you haven't timed the market at all. So these are things to think about, and everyone thinks they're a genius, including me. Sometimes, I even fall into the trap of trying to time the market. If there's something I'm thinking of doing, I'm like, oh, I'll just give it another couple of weeks or another couple of months. 80% of the time, it does not work out. I can tell you that now. If it did, everybody would be doing it. Another important note to consider, and I did just touch on it, but while you're waiting for the perfect time to buy, your money, you might think it's safe just sitting in the bank, and it could be safe from a financial perspective, that it's financially from a physical point of view, or it's not even physical, but you know what I mean, that it's there, your balance isn't going down technically. The issue is inflation. The issue is that the value of the dollar is reducing every single day and every single year, and you might have $100,000 in the bank, but if the inflation figure that year was, say, 5%, now that's an extreme, but I'm just using that as an example, then you've technically lost $5,000 in value. That money that you have is worth $5,000 less. So inflation is something to take into account, not just opportunity cost. From experience as an advisor, and this is a very, very common saying in our profession, is that it's time in the market, not timing the market. And of course, with any financial decision, there needs to be a level of discussion that's utilized, or some pros and cons need to be considered. Not every strategy is perfect, but if you've looked at things, especially if you have a financial advisor, but if you've looked at a decision, it makes sense on paper, the figures stack up, and it looks like a good investment that's suitable for you and your goals, then it doesn't make sense to just sit on the sidelines and wait for things to just get worse, because as I said, they may not. And I've seen over the years, and I've talked about this in other episodes, but some of the most successful investors that I've ever met invested consistently. They didn't look at headlines, or they looked at headlines, but they didn't let headlines influence their decision making. They stuck to a strategy and they were consistent. Those types of investors are more likely to make money than those that continue to read headlines and let news headlines dictate their investment decisions day in, day out, from my experience. So I hope this episode's helped. It's very short, but it just really highlights these discussions I've been having with these other professionals, and just the approach that just the attitudes that I've seen from a few people where, of course I need to drop the disclaimer that even now, or whenever you're listening to this episode, things could get worse. We do not have a crystal ball. Past performance is not an indicator of future performance. However, with everything taken into account that I've mentioned, again, it's important to realize that you don't have a crystal ball, and to remind yourself of that, and that it's time in the market, not timing the market. Thanks for joining us on Sharing More Than the Sheets. Please make sure you subscribe to be updated with future episode releases, and feel free to share this episode with any friends or family that you think it might benefit. Please visit us at sharingmorethanthesheets.com.au to submit questions or requests for future podcast topics. These podcasts have been brought to you by Better Financial Planning Australia. To book a 15-minute phone chat, visit betterfinancialplanning.com.au.